Okay, good morning and good afternoon, and maybe good evening to those in Asia. Welcome to another FX Street webinar. My name is Fan Yang. I'm the manager and founder of FX Time. So let me just give that a little bit of shout out there to my site. I'm basically a technician, so I focus on the technical setups, but, trading involves a lot of things, and you gotta be on top of the fundamentals as well. You gotta be at least aware of them, even if you're not gonna trade around them. A lot of technical traders try to avoid them or scale down their positions ahead of these technical, fundamental blocks like the one we're gonna have this week. Because we have, the big one is going to be non-farm payroll on Friday. But even before that, we got a bunch of central banks that we're going to, we'll talk about that on an individual basis. So we're going to start with the euro dollar. Now for the euro, there was a bunch of manufacturing PMI data that came out. Not a big deal at the moment compared to what's going to come compared to the central bank meeting on Thursday. Yes, it is on Thursday, and there's going to be a press conference after that. So make sure, basically the technical setups, the intraday technical setups going into Thursday, don't depend on those. If you're going to trade, this week is one of those weeks where you should either trade, very short term or wait for a longer term signal, looking at the daily chart. If you're looking for a swing trade, you're going to get messed up by the middle of the week. Or you could get very lucky, but the point is, it's going to be a crapshoot, going swing trade, looking for a swing into next week. So we're going to look at, very short term as well as a longer term type of time frame. So 1 hour and daily time frame. 1 hour, maybe even 15-minute time frame, you're actually going to trade those signals from the 1 hour chart. Now, from the 1 hour chart, let me pull back to the daily chart. And the euro dollar in the daily, you see that it's not really in any direction. It's been trading sideways in 2013. There was a little bit of a bullish swing here, the second half of 2012, but since then, there hasn't been very much of a direction. Now, recently, when the market broke above 1.34, 1.3415 here, I was looking for a retest of these highs. But, we had, if that there was a condition for me, because at that point, the market was a bit oversold, and it was, even though it cracked this resistance, you have to anticipate some kind of pullback. But that pullback proved to be a lot stronger than what it should be. Although it hasn't really introduced a bearish outlook, in my opinion, just yet. The price action looks like it might be, but as far as where the price is, it's at a very key level at the moment. Okay, so heading into this week's key events, it's resting, or it's trading around 1.32. Okay, and you see this previous resistance support pivot. You see it's 38.2% retracement, and it's just above the 200-day moving average, and if it's able to stay above the 200-day moving average, there is a bullish bias. Otherwise, we should be looking for a sideways market where, in the short term, there's some downside risk back towards these lows here, the lows of 2013. Okay, so euro dollar about to break that bullish bias. And if after this week the market breaks below this 200-day moving average, we could look to sell on a rally, something like this, back down to these lows. So we're waiting for that setup, and really, it's a little early to say what kind of setup we're going to get. We might get some kind of consolidation where I would prefer to sell on a break to the downside or sell at the top of the consolidation. It might be one single swing correction. It's too early to tell, but anticipate both types of consolidation. Basically, this is not a trending market, So I wouldn't want to sell on a break. Instead, I would want to sell on a rally. Okay. So that's the euro dollar, anticipating some kind of break to the downside, but not to sell it right away, but possibly waiting for a pullback. Now, I wouldn't want that pullback to push back above 1.33. Okay, so if it comes back 1.3230, 1.3250 might be a good place to short with a downside that potentially back down to the 2013 lows. Okay. Now, when you look at the very short term, first of all, going down to the 4-hour chart, you see that this rising channel support broke. So in the very short term, we have a lot of bearish bias. Now going down to the 1-hour chart, it's under the 200-hour moving average. And in this situation, what I would want to do is wait for a pullback, okay, that pushes the RSI, 1-hour RSI, back to around 60, and the stochastic back to around 80, okay? Now, these are both oscillators, but I use the stochastic for a more counter-trend type of signal and the RSI for more of a trend-following signal. I don't use them for the same methods or same signals. And you can see, this was the case back here. Okay, when the market kind of leveled off and then it started pushing lower, we had a point here where the RSI was at 60 and the stochastic was at 80. Here I didn't take this trade because I needed the RSI to dip below 30 to show me that there was some bearish momentum. Then when it comes back to 60, I'm more comfortable shorting it. So here we did have the RSI break below 30, which like I said, I use the RSI as a trend following type of a tool, and when it dips below 30 and fails to break above 60, that's a trend for me in that time frame. So in the 1-hour time frame, I would enter like that. So the question for you, how do I use indicators? I think I'm explaining that. How would you enter on the rally? Okay, so I'm showing you the near term type of sell on the dip, sell on the rally. And if there's a rally here, and this is before Thursday. If this happens on Thursday, I will refrain from doing this. And maybe if I do, I would use a very small position. But let's say this happens sometime later this session, in the upcoming session. Okay, let's say we have a rally here back towards 1.3250. Now, you also use local pivots to match with the oversold or overbought conditions. So if the stochastic comes back near 80, that's overbought. When the RSI comes up to 60, that's sort of the threshold for the bearish trend, bearish momentum. If the RSI breaks above 60, that neutralizes the momentum. So that's a point where I would want to sell, because if I'm wrong, I'll know very quickly. Okay, and you could probably put your stop a little bit above 1.3255, 71 or something like that. At that point, again, this is very short term, so your bearish outlook from there would be back to 1.32, maybe back to this low here. But ahead of the ECB, I would not expect to break it. So if it comes back here, I would at least scale out half of my position, maybe leave a third of the position, in case it does get lucky and continue the bearish trend in this time frame. Okay, but it's sell into the trend, but not necessarily expecting the trend to extend just yet. Although you want to leave a little bit a partial position in case it does extend. Okay. Okay, so that's the euro dollar. I'm gonna look at some of the questions. Berna, you know what? Stochastic and Bollinger Band has always been in the toolkit, but I haven't always used them like this. You're right. I just wanted to, have some more help with signals as far as momentum, like getting into the trend while it's, getting into, like, say, this bearish trend while it's a bit overbought. And the RSI for me is not the type that shows overbought, as well as the stochastic, which is a little faster. The stochastic is a little faster. So, and also the Bollinger Band. I didn't mention the Bollinger Band. I would like to see it tag the upper Bollinger Band on the rally, and then, because it's under the 200 moving average, I would sell it. Okay. Just like if it's above the 200 moving average, I would buy at the bottom of the Bollinger Band. Although you see, there were instances where that is wrong, and part of that, you could avoid that is you want the 200 moving average to have a trend following type of sign. Okay, but nonetheless, and that means it should be sloping upwards. But nonetheless, there was a signal here for me, and that was a failed signal. So it happens. All types of signals will have failed instances, and this was one of them right here. Okay. Basically, you had your RSI come down to 40 after it came up to above 70s. So this was good for me to buy. And I do have to show you false signals, just so I guess you don't get the impression that this is a surefire way to get in. But it does offer you a this was for me, it was still a good entry, even though, I didn't have a wide enough stop. Let's call it that. And then it stopped me out before it came back up. Okay. Okay, let me see. Candles. Okay, so over on stocks and MAC turning. So, okay, some of you might see some bullish signal as far as, maybe in the very short term, you do see some bullish signals. That's why, for me, yes, it is possible that there's a rally like that, right? But because this is against this trend, I wouldn't want to do it. I wouldn't want to buy here against the trend. And if I do, if things line up like some bullish divergence on both stochastic and RSI, whatever it is, I would be very light on the position here. Alternately, I'm looking for the market to come back up here to sell it. So you might be right that there's some very short-term bullish action to follow this, but the overall picture is still bearish. So I'm looking to sell on the rally. Okay. Did we not break a triangle? I'm not sure where your triangle is. Suarez, 1 hour time frame. I don't really see the triangle. If you're looking at this is a ABC rally. Okay. I mean, yeah, you can make the argument. Okay, I think this is what you're talking about, right? Okay. Yeah. I mean, to me, that's not really a triangle, but it's something. It's the market slowing down, stalling. Okay. I think when we talk about shapes like that, it kind of takes away the description of what really happens in the market, and it's sort of triangles and pennants and all that stuff. It's people use that as like a shortcut. Oh, okay, a break, and then because of A, then let's do B. But you got to look at the pattern in context. That's just it. You don't just say, oh, there's a triangle. I see some lines congesting and then the break. In any case, let's move on. That's the euro dollar. Pound dollar's very interesting as well. I remember last week looking at this in the 4-hour time frame off of this rising trend line, which somehow got a little... Okay, there we go. Okay, so this trend line here, there was a big cluster of support here, very key cluster. bullish divergence of the stochastic in this 4-hour chart. Lots of things happening here, and the market gave us a outside bar or engulfing candle, and after which the market, we had a little pullback, like ABC pullback, and now another rally. So it's holding the bullish bias in the 4-hour chart. You look at the daily chart, not much of a directional bias, other than late 2012, early 2013, right? Market has been trading sideways since that double top, we could say here, at the end of last year, beginning of this year. Okay, so we still have a little bit of bullish bias in the very short term coming up from this rally. It's not over, right? But if we fall from where we are now, from 1.56, okay, which was a key area as well, this previous pivot, if we break this 4-hour moving average, break this 1.5415 neckline, at that point this would be a neckline because it would be a head and shoulders, then we're looking at this pivot and possibly even back down to this low. The market would expose those pivots, neutralize the bullish outlook, and introduce a bearish outlook at that point. Especially looking at the 4-hour chart, especially if this RSI stalls at 60 and falls, the stochastic stalls at 80 and falls. So there's a short signal for me, but because the market, that short signal is against a bullish trend, I would not be very aggressive on it. And because of this week's fundamental risk involved, I would be very light. I would be very quick to take profit. In other words, I wouldn't look for this swing until after the ECB, until after the Bank of England meeting. Instead, in the intraday, look for a little dip, maybe back to 1.55. So looking at the 1-hour chart, okay, 1.55 area, we might still want to respect this very near-term attempt to develop a bullish trend or establish this rising speed line. So 1.55, maybe, basically back to where we began this week. Maybe cover that gap here. That I don't know if all of you see this gap, but this MT4 does show it here. And I have seen it on some other platforms as well. The point is, after this, we could decide to try to buy as well, ahead of the Bank of England in this 1-hour chart. See, I'd rather trade off the 1-hour chart than that 4-hour chart at the moment because, like I said, 4-hour chart is looking for that weekly swing kind of deal, and it's just too uncertain this week to put on a trade looking for a swing with all these event risks coming up. So if there's a dip here, I'll look for a buy here. Put a stop below this pivot though, because below this pivot, the market is sideways to bearish. Above this pivot, it's sideways to slightly bullish, but I would say sideways. So you're looking for this dip to bring the RSI in the 1-hour chart back to 40 and the stochastic back to 20, and that, for me, the combination of that would help me, look for that long position. But again, because of the event risks, I would have to get out very quick. Not looking for anything above 1.56 really. That would be sort of the aggressive target. And even, when the market comes up and it's before 1.56, before this high here, if it struggles, I would say, at least scale out and then lock in some profit because of the uncertainty ahead. Okay. Now again, alternately, there's always going to be another scenario, which is it doesn't come back down and it just extends higher off of this 200-hour moving average. Then if you see very overbought condition, and if the market's offers you some type of consolidation topping in the 15-minute chart and breaks down, then I'm more likely to sell than at the moment, because even though the 4-hour chart shows that we have some resistance here, there's too much risk to the upside to sell at the moment at 1.5555, right? So I'd rather wait till it gets closer to 1.56 for that near-term sell, and put your stop above 1.5611, maybe 21 or something like that, 26, and the bearish outlook from there would be aggressively to 1.55, but we should also monitor this pivot here, 1.5540. So if it does go in your direction and the market gets to that point, try to scale out and lock in some position, because you never know ahead of these event risks. Okay, so and realize it looks like a pullback. Okay, so are we talking about the euro dollar or pound dollar now? We're talking about pound dollar, short 9 a.m. New York time, which was around here. Yeah, so that's a better price, I guess, closer to 1.56. And hey, good job. So if you did trade from there, like I said, 1.5540 area is kind of like your first possible trade management level, where you might want to move your stop closer or scale out your position, or both, to lock in some profit, and let your partial position, try to run lower. Okay, so that's the pound dollar. So after euro dollar and pound dollar, I want to take a look for the euro at the euro pound. Very, very interesting pair for me. It's been a little slippery in that I try to short this rally, and again, it kind of shook me out. But it's not the trend might not be over. Okay. Okay, so after euro pound, I'll take a look at the dollar CAD and gold. But looking at this euro pound, there might be a big change kind of brewing. Okay, in the 4-hour chart, okay, we saw this dip. The market's under the 200 moving average. It looks like it's developing a bearish trend against a previous rising channel. It was a choppy one, but nonetheless, it broke it. And this choppy rising channel came up to the previous highs here, failed to break it. So now looking at the daily chart, it has retreated far from there and about to attack these lows here. And if those break, that would be a very major double top, right? And that opens up a lot of room to the downside. Okay, it will, probably we would want to set up some pivots to monitor. Maybe a Fibonacci retracement to anticipate some areas where we might want to scale out if we were short. Okay, like the 61.8% retracement, which is this previous pivot. So yeah, close to 81.60. I would say even up to 82 would be the target for a break here below essentially 84. Okay. Now that's looking ahead. Now this week, if there's after the ECB and BOE, if the market doesn't push back up above this pivot here, 86.50, we can be bearish. Okay. Looking at the daily chart, it looks more neutral and even has a bullish bias. Okay. But if this top looks like it's going to form if it doesn't break back above 86.50, and at that point, we might want to attempt to short at least back down to 84, knowing that there's a possibility of falling short even further. But at that point, my trade management idea would be to scale out, okay, in case the market does decide to continue to trade sideways. If I scale out there, I could, lock in some profit, at least break even if it doesn't keep breaking lower. If it does break lower, even though you have a smaller position, after scaling out, you still at least have some position to run with the rally. And at that point, you might consider again another rally to short from. So Euro Pound looks like it could be establishing a top. A little early to say, but after this week, if it fails to break back above 86.50, I would keep a bearish bias. Okay, so UCAD. Okay, so dollar CAD, looking at the daily chart, you see that it has been bullish, right? It got a little choppy here, but it has been bullish. And the little consolidation here about to attack this high here, 1.6080. Okay. The momentum is bullish in this daily chart. And you see these, I just want to point these out, that these signals I mentioned, and it's something you can monitor in different time frames. Okay, so when the stochastic comes back down below 20, the RSI has tagged 70, so it shows you there's some bullish momentum, and also price had already broke above the 200 moving average, and even bounced off of the 200 moving average like a slingshot. So now the swing comes down, okay, tags the lower Bollinger Band, stochastic is at 20, RSI is at 40. At that point, I would go into the lower time frames to set up for your going long. And if you take this Fibonacci, you also see that it went down to 61.8. So there was a lot of confluence of signals at that point. Here again, right? The RSI dipped a little lower, stochastic, than 40, but eventually it did hold. Okay. So this was another point. Okay, so for stochastic, for dollar CAD, that's sort of the pattern at the moment. Looking at the daily chart, I think, just looking at the daily chart, I think there's no reason to go against the trend at the moment, which is bullish, but it is choppy, right? So maybe wait for a dip. It might be a while before it tags that lower Bollinger Band and brings the stochastic back to 20 and RSI back to 40. But at the moment, it does seem a little bit overbought in the stochastic. So, buying here might be a little bit, the reward to risk is not that great. But if it does dip lower and then, you get all these signals, at that point, even if the market started to go sideways, and even if you can't break 1.0690, you still have some room to the upside, right? Here, unless it broke above 1.06, I'm sorry, not 1.0690, 1.060, let's say 1.0610. So, if it hasn't broken that, then there is a possibility that resistance is still there. So the risk of that is too high at the moment. And then if it comes down, there's a lot of room for the downside, even within the context of a bullish trend. So wait for that dip, I believe. I think that's going to be a better play. See, it's really close to these highs. So, you want to, I would say wait for that dip and see if it could make another run at these highs. Okay. Of course, I have to tell you that, in that scenario, I'm sorry, looking back at the daily, that plan has a risk of missing this trade if it blasts off like you're asking about, right? Do I think it's going to blast off? I don't know. But I think if it blasts off, I'm not going to be able to catch like that. just because there's a lot of risk for me. Okay. Gold and then Aussie dollar, which is good. They're correlated for the most part, but I think recently they haven't been really in correlation. Okay, so here's gold. Okay, so gold in the 4-hour chart is bullish. I'm still bullish on gold, even though it's made a little bit of a bearish move here. And if there wasn't the non-farm payroll this week, I would be very confident right now to try to set up for a buy. Okay, this is a counter trend move, and if it breaks above this little trend line, we're looking at retesting these highs or even higher. But as far as downside risk, I do think there is downside risk back near these lows here. Okay. Looking at this 4-hour chart, I would like to see this week's event risks sort of settle. And then if it doesn't break below this channel, I would be bullish. But if it does break the channel, I'm looking to sell on the rally. Okay. If it breaks the channel, it breaks 1350. Okay. It would look like the market's flattening and neutralizing this bullish trend. And when you look at the previous trend, it has been bearish. Okay. Well, gold is really, for me, direction is very unclear right now for gold. It was bearish, very bearish, but this rally has been very significant. Took the RSI. You see the RSI here has been below 60, right? Since tagging 30. Tagging 30, stayed below 60, and every time it came up to 60, when you had your stochastic also come up above 80, there was a point of inversion, of continuation. You kind of finished the correction cycle. And then, here we go again. Now this one failed to extend. And that could be a sign of something, right? That's a sign that the bearish market needed some correction. So I would say the gold is sideways right now, right? Okay. Sideways with some very short-term bullish bias. And that short-term bullish bias might not be, you might not be able to depend on that going into this week's event risks unless we come out of it holding above the channel support. If we don't, we could be looking back at these lows here. Okay, if you just look at price action like this, okay, you respected these highs, and if it comes off these highs, hey, it could come back to these lows. The prevailing trend is still bearish, so that target is not out of sight. It's a very valid target. Okay. All right. Now to the upside. Let's say we don't break the channel. I would try to buy on the dip. But I think the upside might be limited at the moment. Between this 50 and 61.8% retracement. Maybe 1500 is sort of the psychological level we could quote unquote target, or at least monitor. If the market does get close to 1500, we might want to make sure we get out of it or scale out most of that position in case the bearish trend is still valid. It's still, So that is gold, right? We're waiting for resolution of whether this channel will stay this week. Okay. And with gold, let's take a look at Aussie dollar. Well, first, the daily chart in the Aussie dollar has been very bearish. Now, Aussie and gold should be correlated, but right now they're not in correlation. As you see, Aussie dollar. Trading still bearish, choppy sideways, but still bearish, whereas gold had a bullish channel. Okay, now, because of the bearish trend and because of the choppiness, I'm still looking to sell on a rally. The market is not bullish for me. It's bearish and at most sideways. If it is sideways, the 93.20 area, I would say 93 all the way up to 93.20, maybe even up to 93.45. That area is, for me, good for, I would respect that resistance if it comes up there. Okay. I would not consider the break of this falling trend line very significant, because the market would break it sideways. A break above 93.45, that also establishes a bottom. Then that's another story. I would look for a bullish correction. But at the moment, the bullish swing is within the context of a sideways market, with a prevailing bearish bias. So I would really want to sell around 93. And that could happen, after this week, we might get a rally back up there. However, if after this week, if we get a break below 88.48 and it keeps running away, that would be a broken, this would be a consolidation and the market would have broken it. And at that point, we're looking at some, here we have 87.70 pivot, but I would say ultimately a very aggressive target at the moment, back down to 80.60. Let's call it 81, psychological level 81, maybe even 81.50 if we chop these tails out and look at some common lows. 81.67 here. Okay. Anyway, there's still some downside. So if the market comes back up to 93, I would plan on selling that there, with a target back to to these lows, but potentially with a breakout, right? Because of the prevailing trend. Okay. Okay, so monthly showing a rounded bottom. Not sure which pair you're talking about, Ray, where the monthly is showing a rounded bottom. But I'll get to it if you tell me. What are the best days of the week to trade Forex? I don't really believe there is a best day. It could come, a good trade can come through at any day, really. I tend not to trade at the beginning of the week and at the very end of the week as well, but sometimes opportunities will show up there, but I would say, the best would be the middle of the week. A lot of actions. You have more participants, I would believe. The peak of participation towards the middle of the week. But hey, again, that doesn't mean you should have a rule like not to trade Friday, not to trade Monday. You could maybe, if you do trade there, use smaller positions if you're not comfortable with trading those things. I would say the Asian session, beginning of the week, Asian session, you kind of see the market digesting some things that happened over the weekend where they couldn't trade, and you kind of need the dust to settle a little bit. But maybe by the European session, and the US session, even on Monday, things can start picking up and shaping up. Some technical patterns will maybe set up and break at that point. I find a lot of trades, like in the Asian session, you can't really depend on the breakouts in the Asian session, because sometimes when you're done with the U.S. session, the market, becomes consolidates, not because of it just consolidates because of the change in the session, not necessarily the market, anything in the market. So when you break those low volatility setups that occurs in the Asian session, I would avoid being so aggressive. Okay, so let's take a look at the next pair. What did I look? Well, dollar yen is very interesting at the moment. Okay, so let's go to the daily chart. And this might be the last pair I'm going to show, and then I'll let you guys ask questions, or if you have any other pairs you want me to look at, we'll do that after this. So, we've been in this triangle, technically in this triangle since retreating from 103.74 here, but you do see the support extend all the way back to our February low here, 90.84. Okay, throughout all this time, this consolidation or triangle congestion is coming off of this very, very sharp rally since end of last year. I would say since November, since it broke in and stayed above the 200-day moving average, I would call that the start of the trend, even though, we had some bottoming action here, really sideways action, but then we broke above here. So since November, we've been bullish, and we kind of got sideways since this high here, 103.74, and now we're breaking back up. We're showing, bullish continuation possibility, which for me first opens up this 101.52 pivot, and then the 103.74 pivot. Now looking at a shorter term mode of the market, the mode has been choppy. You see, very choppy, and recently the selling on a rally has been working, but now I think we might have to consider buying on the dip. Okay, so let's see. How would we do that? Let's see. So this is daily. We broke above the triangle resistance, broke above 99.14 pivot. Let's go down to the 1 hour chart. So this is the 1 hour chart, and you see a very strong break. Also, you see some overbought condition. So buying at the moment, you might be able to ride for another swing, but you have to be quick to get out. Okay, because it is overbought, and the risk of the market going for correction gets higher and higher as you continue this rally in overbought condition. But that is not to say that can't happen. The market does, when it trends, it will stay overbought or oversold for a while. So it does look like, hey, this could be a start of a trend. But the market has been choppy, and let's wait for another throwback. Okay. Now on a throwback, I would look for the market to buy around 98.50. Now this looks like a nice little pivot area, and it would stay above the 200-hour moving average. Okay. I think it can still come down a little lower even, as long as it stays above 98. I think the market is okay for the bullish idea. And for the bullish idea, like I said, we have the 101.52 pivot. But first, we have the 100 psychological level. So look for that to be your first target after the dip. Does the Nikkei follow dollar yen or the other way around? I would say conventionally it's the other way around, but dollar yen follows. I think if you're looking for that type of correlation, I think it's better to look at the yields, U.S. Treasury and versus Japanese yields. But in the very short term, the market could have noise. Like when I'm talking about following, I'm talking about in the daily time frame, in the longer time frame. Within a day, within the session, those correlations can break easily, and you might not see them follow so tightly. I'm talking about dollar yen and respective yields. Okay. Kiwi dollar. Okay. So here's the Kiwi dollar 1 hour chart. I have to admit, Kiwi's been a little bit out of my radar. Okay, but I know that it's still bearish, just like the Aussie dollar has been very bearish. When you look at the 4 hour chart, very, very bearish swing. Kind of, slowing down. Instead of a straight swing, it's been choppy. So sell on a rally has been working. And we have another sell on the rally, opportunity, quote unquote opportunity here. But when you look at the downside, I guess, we're coming up here, coming down to this really wide support area. And we might be able to squeeze one more swing down. But hey, when it gets there, when you look at the daily chart, that's a very key support, right? There you go. It's a very key support. Okay, so it's this pivot area as well. And there might be if the market slows down there, we might have some type of very short-term bullish attempt that we can manage there. Okay, now the bullish attempt, because you see this previous swing being down, I wouldn't be very bullish. I would look for a retest of these consolidation highs at max. Okay, so that's that's a counter trend trade, and therefore not very aggressive. But we do, and also you want to see the market, at least in the 1 hour chart, set up a bottom here before considering. Okay. Now alternately, we know that this is it looks like we're shorting a rally right now. So this looks like a top has formed in the very near term, and this is okay to trade the near term ahead of Friday's. Sorry, let's let this chart update a little. Ahead of Friday's non-farm payroll. Now I'm down to the 15-minute chart now to try to see what we can do with this. Okay. In the 15-minute chart, we might get another swing up. Now we have some oversold condition. The RSI is at 40. We might get a swing up in the 15-minute chart, which gives us the idea that that if it comes back up to these highs, we could try to sell it. I would say in this area. Okay, we could try to sell it first with a target of wherever this low is established. Now let's say it establishes a low here and gives us another swing. Yeah, then up here we can look for short, because the market is bearish, bullish, and then sideways. No particular direction apparent in the 1 hour, in the 15-minute 1 hour chart, but we do see the bearish bias in the 4 hour chart and the daily chart. So that's why we prefer to play the resistance than to play this very near term support. Okay, which could be valid, but if it is valid, I'd rather sell that rally back to this low and maybe even lower. Back to the 200 moving average, which in this time frame is flat and represents the middle, so the mean price action. So this is, when the market comes up here, and let's say the RSI is back up to 60, or the stochastic back near the 80 area, then we should consider selling. I like to see the RSI not break back above 60 though. That would be preferable, because that would mean the market is consolidating. And if it's consolidating, then that's one step away from being bullish and closer to being bearish. Okay. All right. So that's Kiwi dollar, and in that case, a possible trade would be to short Kiwi yen. Kiwi yen. Okay, let's take a look at Kiwi yen. You see, I don't like doing that. I don't like looking at other charts and trying to infer what would happen to a third chart. Sometimes it works, but for me, I rather trade each chart separately, even if they have common currencies. Okay, so Kiwi yen, 1 hour chart for me looks relatively sideways with a bearish bias. But we do have a couple of swings up. Okay, that could set up for something. Let's take a look at the 4 hour chart as well. Okay, so it has been kind of sideways, right? We have a very strong swing back into the sort of the middle of this price action. And if we pull this back a little bit, okay, so Kiwi yen sort of, yeah, it's been sideways after a bullish run since 2012, right? So in the daily chart, it looks like a good place to short might be back up here near 80. Okay. In the near term, I think for 77.90, it could be a level for shorting. But you know what? What I want to see is some consolidation here. Let's go to the 15-minute chart and do some planning. Okay, just wait for it to update. Oh, there we go. Okay. So let's get out of this 15-minute chart. Looks like there's a bit of a top here. Very near term top. Okay. And let's see. It's still bullish in the 15-minute chart. We would really want to see the stochastic at least back above 80 before even considering shorting. Okay. But I would like to see some further consolidation. Like this low right here, 77.32. If it catches another support, then a subsequent break of it for me is very key. Okay, it's easier to manage that trade because it looks like the top has formed, and you can, for me, if after the top has formed, I would look for the central pivot somewhere in the middle of that range, and I would either sell on the break, or if I can't catch that, I would wait for the pullback and put the stop above the middle. Okay, because if it breaks back above the middle, then this top looks to have failed, and it might have already resolved a correction and ready for bullish continuation. So, but if it doesn't break, it means the consolidation might still be active. It might still be consolidating / bearish correction. So I would like to see that happen, but we have to wait for a signal. Just because it's at a point where I want to sell it doesn't mean I'm going to sell it. I'd rather see, and maybe I could start with a very small position if the market comes back up here and sort of fails to break right through. Okay. But I think the stop will have to be above 77.90, maybe even above 78. Let's say 78.11. That would have about 30-something pips difference here. It's a 1-to-1 trade when you're looking for this low. Okay, but there's potential for more, so you can set up another position that has a 2-to-1 trade, so that you average a potential 1.5 to 1 reward to risk. Okay. I think I gotta wrap up soon, so I'll just do a quick look at pound yen. Looking at the daily chart. Okay. Daily chart. Again, this is above the 200-day moving average. The tag of lower Bollinger Band, the tag of the RSI at 40 with the stochastic at 20. Those are signals. And it's run away from that now, so but if the market comes back down again and pushes the RSI back to 40, pushes the stochastic to 20, that could be another signal to buy. The bullish outlook is limited at the moment. 156.78 could be the limit to that bullish outlook, even though there's potentially extension of the previous trend. The prevailing trend is bullish, so for me, I prefer to buy here than to sell, unless the market comes back down and breaks this low here. At that point, I would look to sell on a rally. Okay. But before that, I would want to buy on the dip. Okay, it's getting a little close to this high right now for me to buy, so I will want to wait for a little dip, and maybe you don't have to wait for this to come all the way down. Maybe you take a risk near the middle. Okay. Now there's a rule for ranges that you don't, you sell at the top and buy from the bottom, and you don't do anything in the middle. Okay. That's it's logical, right? Because if the middle is the neutral price of range, and that's where it oscillates back and forth, you shouldn't expect a direction from the middle, or I should say, it's 50-50 direction from the middle. There is no edge, but because of the prevailing trend, there could be an edge. Okay. So if you go down to the 1-hour chart. Okay, and the middle I'm talking about, you get a very good pullback back towards the 200-hour moving average, and the RSI comes back to 40, stochastic comes back to 20, and maybe this will tag the lower Bollinger Band as it comes back up. So that could be a place here around 152.50 to go back up. The stop is a tricky one. Looking at it, I feel like the stop should be below this pivot here. 151.60. Let's say 151.40 should be the stop. And your 151.40. And your target would be, back to these highs here, close to 155. Okay. All right, so that's it. That's it for today. It's almost noon here in New York. I have to get at some lunch, and it's Labor Day, so I'm actually not going to be trading much today. Just, I have my setups. I do have the dollar-yen. I'm looking at the dollar-yen dip, pound-dollar dip. Looking for a pound-dollar dip to buy, dollar-yen dip to buy, maybe even a pound-yen dip to buy from. Okay? Just remember, it's a very heavy fundamental week. Be quick about your trades. I'm not preparing you to trade the events. There might be somebody else that does that. But as far as the technicals, you see the daily technicals. And be ready for breaks. Okay, that's it for today. Thanks again. And make sure to check out my site, www.fxtimes.com. Also, if you want to chat about the markets, on Skype, I'm always on Skype. Skype name is fan.yang.cmt. And I'm in this room with a bunch of traders and analysts. We discuss the markets all day as well. So look me up and we could have further discussions. All right. So trade well, trade safe, and enjoy the rest of the week. Bye-bye.